of July brings plenty of event risk. Earnings may be swaying broader markets, but central banks and policy could sway the FX markets. As we kick off the week, the IMF left growth forecast for the world economy unchanged for this year and next, while it upwardly revised growth expectations for the Eurozone and China. But it did ease expectations for the US and UK. That means this week's growth figures from both nations will be key. Now looking ahead, the two-day Federal Reserve meeting kicks off on Tuesday, July 25th, with no change in rates on the radar. But policymakers are expected to discuss its plan to reduce its $4.2 trillion bond portfolio purchased after the 2008 financial crisis. Now keep in mind the ECB may decide when to scale back its own monthly bond purchases this year. Also on Wednesday, July 26th, the first reading of Q2 2017 UK GDP will be watched. It is expected to show that the economy grew 1.7%, down from the prior rate of 2%. The quarter-on-quarter figure is forecast to improve to 0.3%. And U.S. new home sales are forecast to gain 0.8% in June from the 2.9% gain in May. And on Thursday, July 27th, U.S. durable goods orders will be monitored for a strong bounce. The preliminary reading is forecast to gain 3.5% from the negative 0.8% reading in the prior month. And on Friday, July 28th, U.S. GDP for the second quarter of this year is expected to rebound from the prior quarter's sluggish growth rate of 1.4% to show a gain of 2.5%. Now taking a look at the FX markets, this morning Eurodollar has come off 23-month highs, but is off just 0.1% at 1.1649. And in commodities, September WTI is higher by 0.9% at $46.16. Spot gold hit 1-month highs and is up by 0.25% at $12.58. Until next time, from the New York Stock Exchange, I'm Emmy Blair reporting for ICM Capital.